All right, so this is going to be quick, just an end of the week thing. My position's been going okay, short 2-year, 3-year, 10-year bonds in the euro, um, the dollar, and the Aussie, and then long the Aussie share market, which has recovered quite well, and a little bit short the US market on the spread relative value to the Aussie, and that spread has come in. This, though, is just two thoughts. This is what I'm seeing in the Nasdaq, which to me, it's like the Nasdaq. That's the story that's going to drive, I think a lot of what's going on forward. And we've seen the volatility in the results of Facebook, Spotify, Google, Amazon, Netflix. All those stocks. The wild swings in the results is just ridiculous. So, what I'm seeing is this, it's kind of called a reverse symmetrical triangle. Some people call it a megaphone. To me, it's a topping pattern. When you see this is back in September, when it rolled over, and you can just see how it's made it. Did like here, a higher high, a lower low, a higher high, a lower low, a higher high, and a lower low. That doesn't happen, very often. You get, higher highs, higher low, higher low, higher high, higher low, higher high, higher low, higher high, higher low even, lower high, higher low, and then the trend resumes, right? But when you get this series of, even if you count from here, that's a higher high, that's a lower low after that one, that's a higher high after that one, this is a lower low here. That really is a to me, very disturbing bearish sign. And in my experience, they fail around the midpoint, which is what's happened here. It's had to go and it hasn't been able to come back. We might see if it's come back further in the candlesticks. No, it hasn't really. But to me, that looks very bearish, and I'm quite wary of what could go on there. And when we look at some retracements, right, we see it's busted the 23, right? The 38, that really is the next stop for a correction. That sits in very well with not only the support there, right, but it also fits in well with this little gap that was formed in here, right, for that to get a bit of loving. And to me, that is going to be pretty magnetic, to use my frame of mind. So this, as I said, these megaphones, reverse symmetrical triangles, when you get a higher high and a higher low and a higher high and a higher low, that is, and particularly this magnitude, it's a topping pattern. Keep an eye out for it. The other one, of course, is the bonds, which I put on like a week or so ago. They've done beautifully. Again, this was a compelling trade that I had in mind, right? This is the yield of it. You can see, there's 10-year euro bonds. To me, playing the inflation rate hike trade, it's a great value one because, euro, obviously it's AAA. They've got inflation running at 5%. Their 10-year bonds are 0 to negative. They've just popped positive, and you can see how it has really done this little pop here. It's done the classic turn and go, like it's done you can see this level here, where it's done a rejection, come up here, busted through, said hello, goodbye, and it's off. And it is, really quite nicely so far, obviously, closed in that gap there. So it's reached the first target. There's not much of a target, but when you zoom out, you can really see how it's just starting to turn on a very long-term trend line. Whether you call it that one, whether you call it like this one, right? That one's broken. This one is in play. The next stop will be here, which will be another 75 points. Very easy to get to. When you think about the US and Australia, for that matter, 10-year bonds are around about between 180 and 2%. These guys are at zero, and they've still got a running negative real interest rate of plus 5%, right? So it's pretty disastrous. And as we've seen globally, the bond markets have been taking control of the central banks. When we just look at it in terms of the price, you can see how it's done. Really what we've seen in so many other markets at the moment, like the 2-year bonds have done this. The US 2-year bonds, the Russell 2000's done it. These things, they're all starting to roll over, and to me the bonds have just a more compelling short to play as opposed to trying to short the equity market. Because the equity market, the volatility is insane. If you map out though the bond rate, the 2 or the 5-year bond rate versus the Nasdaq, its correlation's pretty tight. I'll do that in another video. But it's broken down lately, right? And so the markets are still waiting to catch up to what's been going in the bond markets. Bond markets are old, they're boring, they're not sexy, and they're surprisingly ignored an awful lot by equity markets. So there we go, that's it for today. Sure, the bonds, they've been going well, and I'm very wary on what's going to happen with the US equities. Okay, ciao.